Joining us now, New Street Advisors founder and CNBC contributor Delano Saporu. Delano, great to see you. I've got Bob Pisani in my head saying the evidence so far suggests a contraction, not a collapse. What do you think? Because that's what's driving the markets right now, sort of a relief that this earnings season may not be as bad as feared.
Yeah, it's great to see you, Deidre. I think there's two sides of it. Yes, that we may not be as bad as feared, but there's also the fact that we've revised lower a lot of expectations, especially if you look at, on the tech side, everything has kind of been revised lower. Estimates have been revised lower. I do think, we could see something like this off the back of, what happened with Bank of America, where there's a pop because it was better than expected. On the tech side, we may not see that, but we have to look a little bit further out to estimates in 2023 and see how the management is looking at outlook from that point. And that will give a tell on how the market's feeling now, because if earnings are coming down, then we still are a little bit pricey. We'll be still pricey, obviously, on a valuation standpoint, and we have to compress a little bit. But if earnings are, the outlook is strong, then I could see, the market cheering that. But it'd be very, very curious to see on how management is looking out forward to 2023.
Right, guidance is going to be key, and while this quarter may be better than expected, we've seen with the likes of Micron and FedEx how quickly things can change and how quickly demand can slow. So what do investors have to be careful of, look for within the comments from management this quarter, looking ahead to early 2023?
Yes, I think obviously we know this is outside of the macro level, what the Fed is probably going to maybe potentially do a pause in 2023. So having to look at what management's saying as far as demand, I think that's the big thing right now, because if demand is staying, we still have cost that's very sticky. If demand is weakening, then we would see, potentially lower, revaluation for a lot of these tech companies. But if they're seeing demand still staying strong, if they're seeing supply chain not having any issues on the supply chain side, then tech would have a potential mini rally that would be able to sustain. But that's the playbook for investors right now, is looking further out on what management's saying as far as those items.
It's interesting. I wonder, we're getting some continued, Delano, robust metrics when it comes to, say, travel. Some of the TSA throughput today. You got to go back to February 2020 to see as many travelers traveling on a Sunday. But I wonder if you think that's going to extend to things like e-commerce. I mean, we're going to be paying a lot more attention to holiday spending trends.
100%. And, if you look at e-commerce, if you look at eyeballs, if you look at content, take Netflix, for example, they've lost subscribers, obviously, in this past year. And the big thing for them is to focus on how they're going to add back the revenue. And the one thing they're doing is that obviously the ad tier, which would be potentially strong for them. So I think all of, what management's focus on is consumer demand and seeing if consumers feel comfortable with the current inflation prices, with current inflation right now, to pay prices that they've been paying, right? And that's the big issue for all companies across the sector.
Delano, guidance is important, but it's unclear, isn't it? I mean, it seems like we're at a point where fewer companies than normal are confident in exactly to what extent the consumer is going to show up in Q4, what's going to happen with the overall inventory situation. So while they might say something about 23, I mean, what they say in January is going to carry more weight than what they say in October or November, right?
Yeah, and that's a good example of that is Snap. Snap is a company that has not been giving guidance. They didn't give guidance last quarter, and they were saying the sentiments that you echoed, that there was just not a clear picture for advertising spend, not a good clear picture. Obviously, they have increased competition from companies like TikTok. So I think it would still be important from a valuation standpoint to look at, what company is saying in 2023 that may shift. The outlook may shift in January, but it's important to get a gauge now.